The definition of a bull market is a market continuing to move higher no matter what type of news is out there. The tragedy in Las Vegas, the first implication to most people would be, they're going to sell the market off. However, we saw a very strong day in the Dow, which the Dow is doing a very recognizable pattern, a J-hook pattern, and notice what it did at the breakout level. It gapped up and continued higher. The NASDAQ moved into new high territory after the best friend signal on last week, right off the 50-day moving average. Doji gap up, continuing higher through this level. So there's all the strong indication that the bullish sentiment is still around in very good fashion after consolidating and then taking the next wave to the upside. Knowing the strongest top-ranked candlestick signals allows investors to participate in the strongest of the price moves. Our recommendation on NVMI was based upon a best friend signal, Doji gap up, very strong price move over the last 4 trading days. Also, you can see the pattern, fry pan bottom, J-hook pattern, the classic pattern. Knowing what investor sentiment does time after time in the same nature, we can see that same setup occurring in STX, a Doji gap up, breakout of this downtrending resistance level, the 50-day moving average. Just the fact that they gapped it up through this resistance level tells us the probabilities are pretty strong there's going to be more upside. And then if you look at the bigger chart pattern, here's a big fry pan bottom, and where is it breaking out? Right where the fry pan bottom starts. This puts you in a high probability, high profit trade situation. The best friend signal also instigated our recommendation last week on KEM. Again, a doji right smack dab on the 50-day moving average, a gap up through the T-line, still moving higher. Using the strength of each candlestick signal allows investors to kind of anticipate what the pattern is. Looks like a big, huge J-hook pattern, and what our potential target would be. That if this was the existing trend, that's the next likely price move back up to get it back into that trend. Candlestick analysis is merely the identification of investor sentiment, especially at important technical levels. For example, notice the doji, bullish confirmation with stochastics in the oversold area on IMGN. This has been recommended for the last week or so because it was coming up through the T-line after bouncing off with buy signals at the 50-day moving average. Why is this so important? Because candlestick analysis is merely the graphic depiction of what's happening in investor sentiment at important technical levels. The process or the confirmation is very quick after a reversal signal. Many people ask, how many days does it take for your reversal to confirm? With candlestick analysis, it's 0. As soon as you see signals and confirmation after the reversal signals, that's the buy point. That does 2 things for the candlestick investor. 1, it gets them in early on a big trend, and 2, if it fails, you're right back out with a very small loss. This is just merely common sense analysis put into graphic depiction. That'll be it. We'll see you in the chat rooms.